And so if you think you have an idea, and an idea is a cost until you make money out of it, right? And then becomes a profit center. So if you have an idea that you think will have a commercial value, then I think it's the right thing for your business to create some tangible intellectual property.
So Henri, thank you so much to be with us today.
It's great to be here.
And the usual question I ask when I start the podcast is, who are you, Henri? Where you come from, and what got you into insurance?
Well, that's a great question. Who am I? I'm a Belgian who happens to be living in the UK, married to an English rose, um, and passionate about looking at new opportunities where you can do something better than what's existing. And better can be, I mean, that's what entrepreneur means, right, in French. So the whole objective is to actually see a large market which is there already, where clients or anybody in the value chain in some way feels that we could do a better job. And so I've done that in the world of energy, in the world of transportation. And so who am I? I'm an engineer who likes to solve problems. And more to the point, I really love to build teams which can help to solve the problem, because on your own you can only go so far, right? And that's really the exciting thing, is to actually develop a team, go through all the storming, norming, etc., to a place where you can really get the best of everybody on the crew, so that nobody leaves, the kind of the virtual brain rack at the front of the office. When you come up, you have fantastic bunch of different things that you know how to do, and when you arrive in the office, it's written, I'm the CEO or the CFO or the senior product director. So you bring everything, and then really defining the target and making sure that we get there, and also that we learn all the way through, but also have a bit of fun.
That's superb. So before I go into your founder's journey and the fact that, any founder go through their ups and downs, I would love to talk to you about something I read on your LinkedIn profile. You have dozens of patents granted and pending. Can you tell me a little bit more about that?
Yeah, I think, look, when you think of a business, many years ago, someone told me it's a bit like playing on a piano. Now, I couldn't play on a piano to save my life, but I do get the point. If you only have one note and you just play that one note the whole day long, which is cash, 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 or commercial, 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 you miss the point. Is that you need to be able to play all the keyboard. And one of the keys on the keyboard is tangible intellectual property. And so if you think you have an idea, and an idea is a cost until you make money out of it, right? And then becomes a profit center. So if you have an idea that you think will have a commercial value, then I think it's the right thing for your business to create some tangible intellectual property. And so if the leadership or the boss is basically creating some tangible IP, it basically creates that mental framework for the team to do so. So I've done that in the past, in logistics of passengers in airports, of hydrogen systems, of micro trading using distributed ledger between physical assets. So if you have a solar panel and your solar panel next door, how do you get credited to actually send some electrons to your neighbors? And so you need to have a commercial element, otherwise it's just a cost. So yes, that's how you have the patents, and then you understand the tangible value of that, which has value to the investors. It of course has value to you because you have 20 years once it's granted for you to make money out of it, and it becomes a bit more exciting.
So I guess, when you look at those patents, are you going to use them for yourself because you're already running an amazing company called AkinovA? Are you going to sell them? How are you going to monetize them? What's your magical plan?
So look, for each time, what I want to make sure is that the intellectual property is associated with the business. So those patents are basically, yes, I went through the whole process. I had the idea, sometimes in with a crew of other people, right? So ideas don't usually happen just in a vacuum. Usually there are some other people. So sometimes we have several of us listed. So all of the historical patents are typically with the business that you then assign the intellectual property to. And that's the right thing, because at the time I was employed by that business, and it makes sense for them to own the fruits of the investment into me at the time to get that. Now, patents and intellectual property going forwards, clearly then it's attached to AkinovA. And the, the challenge for particularly for fintechs, insurtechs, is sometimes you can't patent the thing because it's a business idea, and so actually being able to then keep a trade secret, maybe with some patents around it, which we're exploring big time on a few of our concepts, um, is a way to, of course, not signal to everybody what you're doing, which is once you know, file something, you tell people, hey, this is something I'm working on. Um, but equally, so you keep the trade secret, which is that kind of component. But equally, there are some pieces that I believe, and patent attorney believe also, that we could patent, which is quite important because it gives you an ability to have a discourse with very large organizations, which is not about being, you know, the old stick licensing where you go and hit someone on the head saying, "Hey, I've got this IP, you're infringing me, pay me some money." That's not the point. The point is that you arrive with an asset that can be valued, and there are some great you know, technologies being developed out there to be able to value those, which then allow you to have a value-based conversation with your partners. And by bringing this thing here, by prosecuting in this way, the NPV of it is worth X. And so when you have that conversation with a large organization on the other side, you come with a chunk of value already, and then you can negotiate a better deal.
Yeah, interesting. So when you look at your journey, you have been working for big technology companies in the UK. You have actually set up a lot of patents, and you're actually extracting value from some of those, and you intend to extract value from new ones you are setting up in the future. So when you look at your founder's journey, Henri, what has been your biggest achievement and your highs? And can you share with us some of your lows?
Sure. The biggest highs have been when someone has been amazing that either I brought in or someone else in the group brought in, and either people wrote them off and said, "Well, I'm never going to go anywhere. I'm 5 years away from retirement," and actually finding that they are the best supporters for the new ideas. So they were essentially against the new stuff, and suddenly they flipped to actually being for it. And because they have the experience, they are able to go a lot faster to change things. The most exciting things are, so for instance, when I was many years ago for a large engine manufacturer, it was a transformation program. So there's introduction of SAP, enterprise resource planning, and I had a budget. I had nobody reporting to me in that kind of, you know, gravity organization thing, but I had been given resources by different resource groups within the firm, and the best bosses of these areas handing me over resources or people to go and do the change program, where they gave me the best people that they had. And sometimes they thought they were giving me the people that they didn't really want to have on their team. So why don't you go and do some change program there on the side and an implementation, which is pretty important for the business, right? I mean, you when you do enterprise resource planning, you change everything in the business and you reclose the thing and you start the engine and hope that everything works. Um, and actually, those people were the best people because it wasn't just a bright person, but it was a person who was bright, but not using the brain to actually, I can do it if. They were spending their time, or I can't do it because. And once you've changed from that, I can't do it because, to I can do it if, amazing. So people who had a whole career, understood everything inside the business, they were about 3, 4 years away from, one of whom was 3, 4 years away from retirement. Of course, they knew everything and who in particular to make stuff happen. And then the other one was a lady who was engineering, so there was inappropriate behavior, if I can put it like this. So she'd been parked with me, and she became fantastic. And from last time I looked at her profile a few years ago, she was heading a big division. That's my best time when you can see that you punch the line side, and they've done it on their own, but you were just happening to be there at the right time. Best time in my career. The worst time, when you know that something is right, but the events, so the external events, basically conspire to making it really difficult for you to prevail. So, from a personal standpoint, um, soon after an IPO, suddenly I have a family tragedy, which made life incredibly difficult in all sorts of dimensions. And it becomes a very personal journey. On the flip side, what it basically underlined is timing, but also time is everything. We're all talking about money, meetings, etc. The only commodity that we have as human beings is time. So invest it wisely. It's great to be with you here today, Sabine.
Thank you, Henri. And that is what I often said to my team is we don't have, handless time. And so today in the world we're in, which is highly digitized, and we're probably doing twice as much as we were doing 3 or 4 years ago, we have to select our project and our time very carefully, 100%. And your stories are interesting because what you are saying is also, we have all of us have talent, and we just need to use our resources in the right way. And often when we work for big companies, we do not always have the luxury to use our resources in the right way. But I think a lot of companies are doing better and better to actually identify, the creative from the thinker and the analytical mindset, and being more cognizant that actually everybody has talents. And if we can use people in the right way, we are more likely to retain them. Partly where in the UK, talent acquisition is so hard today.
Well, it's going to be interesting for the next 6 to 9 months, right? So as to what the economy is going to do and whether or not that will change. I'm hoping that's not the case. That things won't change for the worse in terms of the economy, but I think that's baked in. So then the question is, how do we as an industry attract the right talent? And our industry has to be exciting, right? So you asked me how did I get into insurance? It's by accident.
Yeah.
I mean, I knew about insurance because I was a client of it, but it's the thing that you think after you've gone home type of thing, right? And usually I ask people, when was the last time you woke up in the morning thinking, "Woo, I need to buy some insurance"? And usually the answer is a lot of people wake up thinking that unless they have to, right? Unless you're going somewhere or your business needs it or something like this. So it's what do we need to change to be part of that journey?
Yeah.
And what do we need to have that? And so I just met my co-founder Jean-Michel through my brother. Actually, we were invited for an event in London. I was early, so I went there. Jean-Marc and Jean-Michel are both directors in the same business, so it's a fund. And Jean-Marc so my brother looks after specific strategies, and Jean-Michel some others. And then he said, "Henri, you must be an entrepreneur because you've done it a few times now. So why don't we just do something together? I've got a great idea for you." Uh, and then that was basically the start of it. And we decided to co-found the business once I'd done my due diligence, and I haven't looked back ever since.
Well, tell us a little bit more about AkinovA. And I remember when I met you, I think it was 6 or 7 years ago, right? We were talking about acceleration and all the things. And then when I met you, I said, well, you don't need an accelerator. You definitely don't need me.
Well, you do need the help, all the help you can get when you build some stuff new. Look, by definition, I mean, you have a look at it in a room, right? When you're in a big room and you come up with a new idea, the people who look the cleverest are the people who question the idea and say, well, but yes, but 10 years ago it didn't work, or this and that, etc. So if you want to look clever in the group, don't come with an idea, come with critiques of an idea, right? So when you start your business, that's how it goes. Whether it's an investor, whether it's your client, whether it's someone who is an advisor or whomever. So you'll have a lot of that. So you need to have a sense of what are we here for? What are we trying to do? So if you break down insurance, you've got someone with a risk and they're trying to reduce that risk. So first they need to know they've got a risk, because sometimes you got a risk but you don't know it. So first you need to be told you've got a risk and understand what the value of that risk is. If I think about commercial insurance, right, which is one of our big points. So that's the first thing. Do I know I have a risk and what's it worth? So I need to have people who are, and that's usually people. Technology might tell you ping, it's time to do something, or have you looked at your bank accounts, something needs to be done, or something major happened in the world and you should think of something. But usually someone will have then to convert that, let's call it business requirement, into something that the capital that is used to underwriting that will understand it. And that's typically a broker, right? Then, of course, you'll have some lawyers, some service providers. If you're in cyberspace, forensics, accountants, forensics, people who check that your system was indeed compromised in the way it was. Um, and then, of course, you have the investors. Now, the investor can be an underwriter, traditional capital, so insurance or reinsurance, but it can also be just a family office or an investor saying, well, actually, it's a good risk, I'd like to underwrite it. So if you break it down back to the basic components, I've got to be able to make it simpler for the person who's got a problem to understand that they've got one and to be able to articulate it. On the other side, I need to be able to say, well, what's its worth, min, max, and most likely. And if it's min, if it goes badly, how bad can it go? And if it goes well, but usually, where's the middle? And that's an exercise in business dictionary, because I've got whether it's be a broker, an insurer, a reinsurer, an insurance-linked securities, or a normal investor, or across all our chain, they all have quite a different business dictionary. So if I'm a production broker versus a placement broker versus an insurance or reinsurance broker versus an ILS broker, I use different words. And sometimes it's not even different words, which is even worse. They're actually the same word, but they mean something different. And it brings me back to when I was on the board of a joint venture in Japan. We had pre-board meetings where things were discussed as to what was going to happen at the board meeting, just to make sure that everybody understood language-wise. Then the board meeting was happening, and quite often afterwards, we would have a meeting where we explained what we thought we'd understood that the other person was telling us. Now, it might sound cumbersome, but you never came out of a meeting not being clear as to what people were saying. Very often in insurance, we say something, we hear something from the client, we convert it using a word into our own business dictionary, and then there's basically a loss of information. And if you think about the information from the risk owner, so the person who wants to be insured, the insured, all the way to the capital, there are lots of translations. So the loss of information is immense from the front to the back. So AkinovA is really there to think about the edges and then build the technology and the processes from the edges, versus focusing entirely on one or two things within the chain. Because then you are always focused on who is there to make sure that the risk transfer works.
Yeah.
And for risk transfer to work, you need premium, and you need capital, and you need people to be able to explain what is it. As long as we can satisfy that community, we're doing our job. And then you can introduce liquidity, because the more liquid an asset is, there is no market for risk of any depth. It's once a year you have premium coming in. Maybe there's a tiny amount of secondaries, maybe some equities within the listed insurers, but there's not a lot of liquidity. And for more capital to come to the industry, you need liquidity, because people need to be able to say, if things don't pan out and it's now worth 80 cents in the dollar, who can I send it to?
Mm-hmm.
And if you can't sell it to anyone, then the liquidity is shrinking immensely. You only talk to people who will just understand it better than everybody else. And the market needs more capital.
So what I hear is when you look at your community, you're actually serving different stakeholders. Even within the broker community, which is commercial, you address the need of a multitude of macro segment within the broker environment, and then enable them to place risk with carrier, with whoever is providing transfer risk within your environment, which I assume can be insurers, carriers, Lloyd's of London, syndicates, but there could be many other outside capacity providers. Am I right,
Yeah,
Henri? Yeah.
totally. So we've got a database now, probably about 21,000 global investors. Of that database, about 5% is insurance, traditional insurance capital,
Interesting.
and the rest of it is, whomever. Now, the challenge, of course, is you can't just say that, let's say I want to get some climate related, some transition related risks. So that's one of our 4 pillars. And you can't go and sell that to someone who is only interested in property in the middle of France or in the middle of the US. Um, they'll only be interested in what they really like to see and what they really understand. So there's an immense amount of work where uh, we always talk about AI and machine learning, etc. But I think a little bit of HI, human intelligence, is not bad, which then allows to basically shrink the universe and then get more the tech to basically work on that and distribution and the like, and make it easier for the brokers and the risk manager or the CFO of the business that want to get insured to find the right capital to underwrite the risk.
So you already mentioned transition risk, which is one of the major risks. The Bank of England have asked a lot of financial service providers to look at in recent years, which is really about looking at the change in business model. I tend to talk about transition risk as a business model which is being transitioned from one to another. An example would be energy provider. Let's think about BP, Total, who have to move from fossil fuel to providing renewable energy. So moving to solar and all this great new tech. Am I right? And so what you are providing to them is a way to offload that risk and enable them to make sure that they can, I guess, insure the new project rather than the old project. Am I right?
Yeah, I think so. You're spot on. There's a lot of depth in that, and so we're not going to go in there, otherwise we have 2 hours. A very exciting conversation, but maybe not for everyone. So let's start from the business model transition is, and the capital intensity transition that people have in their business is immense. Also, there's a huge amount of, a lot of people worry about transitional risk and ESG and all of that, but cyber risk is a big ingredient in that, which is part of intangibles, which is the second one of our pillars. To be able to do that transfer, I would love for the businesses and for the insurance industry to move from talking about risk transfer to risk sharing. Because if you think, I'll give you an example of, so in cyber risk, but it's no different to if you're monitoring a well, or if you're monitoring a factory, or to dynamically be able to understand how your business is performing, particularly as you're transitioning from A to B. That's, it's the transition is the risk, right? If I underwrite a risk and I'm capital underwriting, whether I'm an insurer, or a big PE firm that takes a position, I want to really understand how that transition is going. Right? It's no different than when you go to a bank and you take a loan. You'll probably have someone to oversee, once a quarter, once a month, or once every week, depending on how your cash flow is doing, how you do it to manage the transition. So when you say transferring, there's a bit like kind of here's a pass, and sometimes it's hospital pass. You as an underwriter, you lose money, and sometimes it's a great pass, and you as an underwriter, you make money. Well, if you do risk sharing in the cyber world, would mean that now I have as a business to give you a check on the pulse of what I'm doing. It's a bit like, I have one of these watches on my business wrist, and it tells you whether or not the pulse is going well, or suddenly panic should setting and you should be thinking, okay, what should I think about it? So it's that risk, from risk transfer to risk sharing. The more the industry talks about risk sharing, because the reality is, once I've underwritten you, I'm joined at the hip with you for the duration of that risk. And so the more there's a passage of information, the more you can basically get more capacity to underwrite the things that the businesses really want to do. There are some businesses which need to transition in a dimension of more cyber risk, because now I'm more and more distributed, but also have massive amount of transition risk of carbon footprint, and I need cash to finance this thing over there. So there are immense transition risks which needs to be managed, and the investors need to understand what they are being exposed to, right?
Yeah, no,
And
absolutely. Yeah. Sorry.
so, look,
Yeah.
it's exciting. I mean, that's all I'm trying to say is, look, when you are an insurtech or a fintech, if it's business as usual, it's very difficult to come in unless your stuff is 10x better, the dimension of 10x on cost, on speed to market, etc. When you have dislocations in the market, and there are dislocations on transitions that the clients see now from the commercial end, then by definition there will be a dislocation in the capital that underwrites them.
Yeah.
Now that's the best time to basically go and launch things which make that capital understanding and the business dictionary to be easier. That's where we are.
And one thing I like you actually highlighted is not anymore just about transfer risk. It's about risk sharing. And I think I mean, I could see in my head, when you start looking at the startup ecosystem, young ventures, it's not anymore around this vendor, supplier, seller, relationship where you have a vendor relationship anymore. You have to be part of a partnership, collaboration, where you actually have to drive some trust through transparency and by providing the information people need to actually make the right decision. And I think with your concept of risk sharing, you actually also entail trust and transparency, and also by using technology, I assume as well, enable all the parties to know what they are doing and where they are going together.
With a common business dictionary, with no loss of information. And we know it works, that transition, because there's always the concern of, if I have some info and you don't have some info, I could price better, and etc. That's okay for a community. But if I now look at my transition risk, and if I look at whether it's be Marsh, Aon, Gallagher's, and so forth, and you look at the world of intangibles, which is the undiscovered country for all of us as a market, the last 30, 35, maybe even more than that years now have been really about the significance of the importance of the industry, insurance as a whole, to the world GDP has decreased,
Yeah.
steadily, right? And that's because we are much better to understand and be able to apportion value to something that's physical. You can touch it, you can say, well, how much was it trade for? Well, that's the price. When it's intangible, of course, we talked about IP and patents earlier. How do you take a view, right? So then the question is, what's the business dictionary around these intangibles? What's the way that you can basically say, from A to B, this is how we should think of value? What's the realizable value? And then it's about the risk transfer, and then moving that to a risk sharing arrangement. And that means that I have a better understanding of where you are and how you evolve that transition, going back to a transition risk. And also we've agreed a business dictionary as to what we are actually measuring. Otherwise are measuring something, but what does it mean, right? And that's a deeply human behavior, because what we then have to do before we go and build tech, sometimes as an entrepreneur, you rush in, you say, I know exactly what it looks like. Here we are. Here's some technology. Put it in front of the clients. Client says, it looks great. I'll see you later, right? So then the question is, how do you get from there to actually talking about money? And that's really about discovering the real pain point. Where's the real migraine? Here's an aspirin. Oh, look, you now feel better. Here's some vitamins.
Yeah.
And that's business. That's what we have to do. So building things which don't scale up. There was a talk, I can't remember from whom, from somewhere, saying that do the things which don't scale up first, but know how you're going to get to scale it up.
Absolutely.
Don't scale up means that you have to do the things by hand. It might look electronic on the surface, but you do it by hand. You therefore understand what are all the hospital passes and the good passes and the things which don't go anywhere. And from there, you can then build your system and you can basically get the right take.
Yeah, so you start as a wizard of Oz, right? Which is a technique often we can use as startups to actually do the things manually and see where the process goes. And then you actually apply technology. And another thing you were saying, Henri, which is really starting with taxonomy, right? Start with really understanding the language you are going to commercialize so that everybody understand what we are talking about, which I think is very, very strong and very powerful. The other point I captured, which I remember, reading in the news, is one of the first deals you actually traded on the AkinovA platform was cybersecurity. And I remember that was a few years ago. And so being able to go into intangible asset is actually fascinating because that's a question I often get from insurer, how we move from physical to intangible, which takes me, can you actually insure the metaverse and NFTs as a result?
Totally. I mean, there's no debate about it, right? But you need to have, for me, business is a bit like jumping from one tree to the next tree to the next tree, with a kind of rope. So you need to get the right length of the rope to the tree, and then you need to find the next tree, and then you can start again, right? So if you have that mental picture, so the question is, if you go straight to something that is completely intangible, and you don't have a business dictionary, so a taxonomy, right? So you and I, when we say something, we mean the same thing. Um, and in particular, because at some point you need to be able to say, what's the value at risk? How much money is this worth? Because that's the discourse. It needs to be in a contract. I'll insure you for X. Um, but there's a journey to get there. And I'll start from the world of, if you have, for instance, if you're a bank today, so there are a couple of there are a few new banks banks in the UK launching. One of whom I know, one of the co-founders, Bank North. So it just launched. They are basically for SME, the north of England. Um, when you see them on the right, or you hear about what they do to underwrite a client and to basically have a loan, I mean, you underwrite a business. You don't underwrite a specific thing. You basically say, here's a loan to do specific things, but actually you underwrite the team and the business ability to repay it. And you hope as a bank that you're going to have your principal back, and that's the bargain basement, right? So you have your money back, and then you hope you can get the interest on top. But essentially, they underwrite you as a business. They don't underwrite you as, a fleet of vehicles or, whatever it might be. So once you understand that, if you can underwrite the business and not just the class, you have a much better way of understanding the intangible value around the business. So we actually trademark that, underwrite the client and not the class. And to get there, you need to also get the capital to understand what that means. So our view has been, if you start with the transition risk, more in climate related. Why? Because capital has been very proximate to the risk through insurance-linked securities. That's where it started. And then you get to places that people understand already. Mortgage is a great place to be, because actually, if you unpack mortgage reinsurance, one part of it is climate. You might think of it, but actually it's climate. So back to pillar one, transition climate. But the other one is credit. And guess what? If I'm an investor in capital market, I look at credit risk the whole day long. So it's appealing to a broader universe now. So that's step two. Step three, I look at credit insurance, because that's what you do the whole day long in capital markets. So now it's step three, which is expanding the universe of people who can then look at the type of deals. What we then have to do is to prepare policies, which we are trialing now with soon, a few weeks from now, hopefully with a Fortune 100, but before that, FTSE 250 type mid-market companies, which is to underwrite the company as a whole. And with that, I'm preparing for my fourth pillar, which is the intangibles. And there you need to be able to have the right structure to deliver the right value to the risk manager, but that can be understood by the capital that underwrites it, traditional capital and alternative capital. And if you do these these four things in the right order, then each time you start from a place where the business dictionary is already established, so you don't need to teach anyone because that takes a long time. But each time you increase the depth of the capital available to you a little bit,
Yeah.
until it becomes much more meaningful. That's our plan.
Which fascinates me because, as you said, often when we think about insurance, it's about insuring classes. Real estate, I guess cyber would be considered as a class, or maybe the creator economy, maybe in the future, which is the new things on the block. But what you are saying now is you need to look at the business in terms of many different ingredients. And one thing which has always fascinated me is the brand value. There is a survey which is done every year where you can actually see which company at the highest intangible asset from brand. And that is an asset, which often is not always really well understood, partly from the insurance viewpoint, I think. And what you are saying to me is we have reinvented the way we look at insurance or risk transfer or risk sharing, when we actually are able to look at the full business and each of the ingredients, including the people, the value they are going to create for their customers, and then the asset class they are focusing on, to actually provide much more ability to find capital and to find a way to secure the business for the long term, which is far more sophisticated and complex than a lot of things we hear out there.
It is, but the reason why we organize by class is because when you put your hat on, let's say as an actuary, which I'm not, I mean, there are super clever people, and they work super hard to understand a particular risk to a place where statistically there's more chance for the capital to underwrite it to make money than not, right? And for that, you end up by being a specialist of automotive in a particular segment, commercial consumers, whatever it might be, in a particular geography, because there are particular risks, about hail or whatever it might be, flooding. And you have to then specialize. Now, if you think about my reference to a bank underwriting, right? So I'm underwriting you now. I don't write your cars or whatever. I'm lending your business some money. You've got the money up front. It's not like insurance where you may have money if you claim, right? You have the money up front. So there is a way to think about it, is that insurance is contingent capital. That's all it is. Whether it's banking capital and you have a facility, or it's insurance and you have basically a contractual facility, it's contingent capital. If you start from that, then you try to say you can understand that the dichotomy is, if I'm doing insurance, the reason why we've organized ourselves by class is because there's no liquidity or very little liquidity. I buy something and the cash is on the balance sheet for a year, or if it's UBI, maybe much shorter. But basically, you try to accrue some capital. Some of it will go in reserving, some of it you'll be able to reinvest, etc. But essentially, it's because I really have to understand that one thing super well to be able to say whether or not it's priced accordingly or not, and then I can try to get the client to pay the price that I think it's worth. Capital markets has gone the other route, which is to say the more liquidity I have, it may not be priced correctly, but the price will be discovered by the market. And for that, you need a bit of secondary trading, right? So the journey that we're embarking on is to say that, of course, there will still be a home to be able to be the super person to underwrite particular property in Austin, Texas, or whatever it might be. Of course, that won't change. But to go to the next place, which is where the industry can increase not just by 2-3%, but be 10x larger, you have to think of the way you underwrite the risk in a different way. And you have to get back to insurance is contingent capital. Once you do that and you have liquidity, so if something happens, so let's say I buy a bond. So there are some technology firms, they'll sell you a bond for 30 years. In the technology space where you might have been the queen of the hill yesterday and tomorrow you basically toast, but they sell you a bond for 30 years. The reason people buy it is because it will give them a yield annually or quarterly. But also if things were to pan out, not pan out, or pan out, they could load more if things are getting very exciting, or they could offload it. So that liquidity offsets the need for the actuary to understand everything. Because when you buy a bond, you don't understand everything about the business, yet you bought it. And the reason why you're happy to buy it is because A, you hope to get a return from it, and B, if things don't pan out or things pan out, I could actually load more, or I could basically unload and basically reduce my exposure. And once you understand that contingent capital plus the liquidity, it means that I now don't need to know all there is to know about Henri's glasses that he loses the whole day long. This is why I'm not wearing them. Because it's super transparent, so it's the bane of my life. But you don't need to know all about that risk. You now need to know me as a person. Does that make me a high risk because I'm driving without my glasses, which of course I wouldn't do. But or does it matter?
Fair.
Now you can get into the intangible world, and
Mhm.
when people start to understand that, then we won't try to basically monitor everything. What's your risk on cyber, this and that, the other. Ultimately, the response of management within the first hour having been breached, for instance, if you are a listed business, makes the difference between your stock going up,
Yeah.
or down, and then 6 months later, finding that the volatility on your stock is high, so your cost of capital has gone up, whether you like it or not, even if your stock has gone back up, which it often does. And those responses needs to be captured in the way you lend with contingent capital.
It's
If
true.
you boil it back down to that, you understand that both worlds are still there.
So when you look at all this you've talked to us and future opportunity within our industry, looking at a future tech world, what would be the couple of things you said that we need to watch very closely and where there would be immense opportunity for our industry in the future?
Commercial insurance, A, it's profitable. B, the degree of pain from the biggest risk managers and CFOs, because they would like to have a discourse with the industry for things that they would like to do, like all these transition risks. So do I need to basically capitalize myself even more captives? And so there's a capital inefficiency there, but nonetheless, there's tax efficiencies and a whole bunch of things which could be useful. But then the more that happens, the fewer the good risks come up to the industry to feed the industry, which then to get the capital. So it can be a vicious circle. So I think if we look at commercial insurance, and if you look at the commercial insurance for things which are not, and we have 2 ears, right? So I'm wearing one of these things. I was told many years ago, you're born with 2 ears and one mouth. Use it accordingly. So we, the industry, need to listen with 2 ears, not hear the client and say, yeah, I'll come back, but the price is now twice as much. We need to actively listen to our clients. And then we need to be able to articulate in the right business dictionary what we think we can do for them and the path that we'll need to get from them. If you look at cyber insurance 4 or 5 years ago, you couldn't get any information from the clients. Once a year, you fill in the form. That was it. It's like life insurance. And on Monday, I'll tell you that it's everything. I don't run, I don't drink, I don't smoke. I do run, I don't smoke, I don't drink. And then on Tuesday, I do exactly the opposite. Well, to do that risk sharing, now I'm going to have to share with you some information, and it will be continuous, not just once a year. With that, you can start to be able to do a whole load more stuff. Capital markets does that the whole day long. Doesn't get it always right, of course, but there's always a price.
So looking at this going to be my last question for you, Henri. What would be your 3 top tip for anybody out there, risk managers or entrepreneurs wanting to come into our industry?
The first thing, it's a highly social industry, and no digital marketplace like AkinovA otherwise is going to change that. So if you want to have an industry where we play our cards right as an industry, it can be 10x the size of what it is, at least. There are very few industries that I can think of which are fundamentally important. There is no advanced economy without insurance industry. Whether people like it or not, that's the case. Yeah, you want to run a business, You want to drive a car, you want to own some assets, you'll have to have some insurance somewhere. So if you want an industry that's systemically important and fundamentally important to economies, if you want an industry where there's a social fabric, and if you want an industry where technology has yet to make its mark, and I don't mean it in a bad way, because we always forget that in the 70s, insurance were the first ones to buy the big computers to be able to crunch numbers, right? So if we can rekindle that love for applied technology, not just tech for the sake of it, and applied not just to improve ourselves within the insurance industry so I can transfer more information faster to you, that's all good, but applied to be able to, with 2 ears, listen to the clients, so the risk manager, and on the other side, the capital that underwrites it, and reconstruct, not in a big bang, usually that, you know what happens to big bangs, big and bang, and then God knows what afterwards. If you can reconstruct it in a way that is more concentric, with the client not at the edge or at one end, but in the middle, and the capital also in the middle, and then the people with the business dictionary, brokers, and so forth around it. That's what we need to do. And if you are a graduate, and if you want to apply your numeric skills or your negotiation skills, so you don't need to just know everything about numbers, it's useful though. And if you have a string of I want to apply technology, not just tech for the sake of it, this is the industry for you because it's important and everybody uses it.
So, Henri, where can we find you if we want to know a bit more about AkinovA or yourself? Where do we go?
So several ways. Of course, there's www.akinova.com. That's the online version. We are at 15 Bishopsgate in central London. We have employees in Spain, in the US. I mean, so we are a bit everywhere. But the website is the best. There's also a telephone number in there, which basically helps people to go direct to us, me or others in the business. Then, of course, there's my email address, henri.winand@akinova.com. There you have it.
Merci. Well, I want to thank so much, Henri, for the great conversation and great insight you've shared with us today. I think we've learned a lot around tangible, intangible, asset, taxonomies, and business model reinvention. Great tip for the risk manager of tomorrow. So thank you.
Ben merci, on va le faire en français maintenant.
Bien sûr. Jusqu'à la prochaine fois. Au revoir.
Au revoir, merci. Merci.